guys, it's Jill Kaminski here, and we're talking to Paige.
Hi.
She's a lender from Loan Depot, and she's going to kind of go over the loan process and then any questions that I'm going to throw at her. So
I'm kind of scared.
Don't be scared. You're going to do just fine. So why don't you tell us a little bit about Loan Depot?
So Loan Depot is the second largest non-banking lender in the country.
Oh,
so
wow.
yeah, in the country. So we've been around for about 7 years, and we have an amazing technology department. We've got many loan programs out there. VA down to 520 score, 100% VA loan, FHA loan down to a 520 score.
Wow.
USDA conventional bond programs. We do it all.
Wow.
Yeah.
Okay.
Yeah.
So a wide range of loan programs going down to a 520 score.
Yes, absolutely.
That's good to know.
Yes, it is.
Because I tend to find, a lot of people who had, credit issues or who fell on hard times and, maybe got behind on medical bills and other kind of things.
Yes,
and their
100%.
credit scores have taken a dip.
Yep.
And they're still working on it, but wanting to still, buy a house.
Absolutely.
So
everyone's had life challenges and life events that have happened. So to think that, no one's ever had that or they haven't gone through it, I can guarantee you in the 15, 16 years that I've been doing loans, I've run into it before. And we definitely look at that and we help people with that. And we want to do loans for those people. It's not like we're going to cherry pick. Right. We want to help. Everybody has a life event. We all do. I've had it. I'm sure you've had them.
Yep.
We all go through it. So it's something that we look at, and we still want to do loans for those people.
Yeah. Well, yeah. I mean, my whole goal is, just to help everybody no matter what. Whatever your life situation is, if your goal is to have a house,
Absolutely.
if there's anything I can do to get you in a house, 100%. I will do it.
Yeah, right, 100%.
As long as it's legal.
Yeah, we stay within the legal guidelines.
Yes.
But yeah, so a lot of times I'll find people that feel like they have to rent because and they're paying $1,500, $1,600, $1,700 in rent.
Which is even more than a house payment would be.
More than a house payment in many areas. So it's definitely something that, I'm passionate about.
Yeah.
Just because you've had a life event doesn't mean that you can't buy a home.
Yeah.
So it's just working with someone that knows and has the programs to put you in. And if you can't buy it right now, let's say you could buy 3 months from now. We're going to put you on a plan and get you there so that you can buy in 3 months.
Yeah.
So the longest I've worked with a client is about 2 years and 4 months.
Wow.
And then we got them into the house. Yeah, we did. We got them into a house, though. So that's
amazing.
all that matters.
Yeah.
Yeah.
That's dedication.
Yeah.
Over 2 years.
Yeah.
That's amazing. I think my longest was about a year of working with someone and trying to just help them, get everything going.
Yeah, it takes a while. And sometimes there's setbacks while you're in the process. And we understand that. So it's like reassessing, doing what you need to do, and getting back on track. So I think that's something that everybody can and should be able to do.
So a question everybody has is, where does this funding come from?
So the money?
Yeah, the
actual
money.
Okay, so we have warehouse lines. So every bank and or we're FHA, VA, USDA. Okay, so we are what's called a direct lender. So we are direct. So that means we're allowed to underwrite, fund all of those items right within our entity. Okay, so we have warehouse lines. So we have large warehouse lines that a simple way to look at it is almost like a credit card. Okay, so we have a really large credit card limit. And so when you come in and buy your house for $200,000 minus your down payment, that $200,000 comes off our warehouse line.
Oh, okay.
Yes.
So you just have kind of like a large bank account.
Yes.
And then as the loans come up, you have the money just right there to fund.
Yes.
Okay.
Yes. And then we wire the money through the Federal Reserve.
Oh, okay.
It goes through the Federal Reserve, it goes to the title company, and that's where all the funds match at the end.
Okay.
Yeah.
Okay. So what is the pre-approval process?
Okay, this is one of my favorite subjects. So there are several different kinds of pre-approval. One of them is, I've talked to you on the phone, you sound nice, go buy a house. And then,
okay.
That is not what I do. Then there's
You're like, I like you. You get a loan.
Yeah, you get a loan. You get a loan. No, doesn't happen. So then there's also you can talk to someone and pull credit and say, oh, you've got a good score. You sound nice. Go buy a house.
Yeah.
Okay. So that's a little bit better than the first option, but not much in my book. And then there's a third option where you actually go and your lender gets all the documents, pay stubs, W-2s, bank statements, anything that's needed to really look at and assess your loan, because there are so many moving parts to getting a mortgage that those horror stories that you hear of people not getting into their home the day before or 2 days before or 3 days before close of escrow, it's because that work isn't done up front.
Okay.
And so it's really, really, really important to go through a good pre-approval process so that you have a confidence when you're out purchasing, knowing that nothing bad is going to happen at the end.
Yeah.
So I think it's really important to be due diligent, go through that full pre-approval process many times.
Yeah.
We go all the way through underwriting so that you have a full underwritten approval when you're out shopping, which also helps you on the buy side, right?
Yes.
So when that listing agent calls me, I'll say they were already through underwriting.
Right.
They're already all the way through underwriting.
Which definitely helps, I think, make your offer stronger if you do that.
Absolutely. And they'll say, well, no, you mean like the automated system? I'm like, no, the underwriter is signed off. We're going to need an appraisal, updated pay stub, earnest money, and we're good to go.
Yeah, which is awesome.
It is awesome.
Yeah.
It makes it a lot more pleasurable for you, the buyer, so that you aren't like, oh my gosh, I don't know if we're going to get this house. I don't know if we're going to get this house. You know? And that's no way to buy a house, in my opinion.
No. And you don't want the stress added on of not knowing if you're going to even be able to get, underwritten.
And I don't want that stress either.
Yeah, I don't want that stress either. I don't want to show you your dream house and be like, oh, I'm so sorry you can't get it because you can't get approved under, the underwriting process.
Right,
so
absolutely.
I don't want that to happen.
No, and I don't ever want to deliver that news. Ever. So, no.
Well, I would really like that.
Yeah.
And how long does it normally take to get pre-approved?
So if someone goes online, fills out an application, and gets us their documents. So we do things a little bit differently. So I have them fill out an application. We go through and fill in the holes in the application. And then after I look at the application is when we request some documents. We'll request some documents, only what we need. Okay, we're not going to ask for it if we don't need it. And then we'll get those items in, we'll look them over, we'll get them ready. We get it usually into pre-approval. If it's a simple process, if it's a simpler file, it may go into underwriting within 24 hours. If it's something where there's business tax returns and corporations and K-1s and all those types of things that come along with it, it may take a few days to get in. But we submitted one on Tuesday to underwriting, and we got our approval out on Thursday.
Oh, wow. So it's pretty quick then.
It is quick, and it's as quick as the client wants to be. So if they don't get me the bank statements or they don't get me their pay stubs, then obviously I can't submit it for pre-approval. Okay. So if they're due diligent and get it back to me, then we'll turn around and we'll get it submitted.
Okay. So if you heard that, she wants you to submit documents as soon as possible. Because it will make everything a lot quicker and a lot easier for them. So they're not hunting you down and writing you tons of emails or calling you every 10 minutes saying, hey, where is that document?
Did you get that pay stub yet? Did you get the pay stub? Please send over the pay stub. Yeah, for sure.
Okay. Do you guys offer any credit help?
We do. So the team, we have the option to go and do credit rescoring. So, and we have a simulator, which is amazing. So if your score is a 590, and I'm like, oh, but your interest rate will be so much better at a 600, but and you're like, oh, I'm never going to get to a 600, I can go into your credit report and manipulate those numbers and say, okay, but if you paid this Capital One card down to $300 from $400, and your Kohl's charge down to $250 from $375, okay, I can get your score up above the 600. So those are things that are really valuable so that we can do that. And we have the things as well as we can add a credit card. If you had another credit card, because some people don't have any, right? Or they only have one or they just opened it. So if they need to add a credit card, or if we can pay a collection off and do a pay for deletion, we can do that as well and get their score up. So we've done all those things, and we happily do that, not just to get them in a loan, but possibly to help get them a better rate.
So then what you're saying is the higher your credit score is, the better rate you will get.
On programs, specific programs, absolutely. On conventional, 100%. If you're below a 600, then there are definitely some hits to the rate because you're below 600. If you're below 580, there are hits for that as well. So as you go up in about 20-point increments, the rates get a little bit better. After you're, on FHA, it doesn't impact as much after you're above like a 640. But on conventional, the higher the score, the better the rate.
Okay. Well, that's good to know.
Yeah.
Okay, so what happens when we get an accepted offer?
Woo-hoo!
Yay! And we start the process of buying a house.
That's so exciting.
Is that a loaded question?
Totally loaded question. So typically what happens is you've figured out whose room's going to be whose, right? Where you're going to put the table, where the Christmas tree is going to go, everything, you've placed it, right?
Right.
So then and if you've been through the pre-approval process, this is exciting and easy.
Yeah.
I don't want to say easy, but easier. So we get the contract in, we put all the numbers in, we put in the address, and then we get to send out these about 50 pages of disclosures that can be electronically signed.
Okay.
I really like people to come into the office and sign them. Mm-hmm. I'm really pushing people to do that because it's a lot.
Yeah.
And this is the largest purchase of your life, right?
Yeah.
And I truly feel if you can spend an hour to go to the dentist, I know teeth are important, I'm not saying anything, but a $250,000 house is also really, really important.
Yeah.
And I think it's so much better if we're sitting across the table from each other and I can explain everything to you so you understand.
Yes.
So you're not guessing. I don't know what I signed. I don't know what my interest rate is. I don't know what my credit score is. And I hear this a lot. I don't know, not from my people, but
I hear it
out
a lot
in the field.
Too. Yeah.
I don't know what loan I'm in. So you need to know those things.
Yeah.
It's really, really important. And those disclosures are supposed to help with that. And a lot of times they can just go through and be e-signed, which we can do, but that doesn't help you understand it.
Right. And that's another great reason to pick a lender that's local. Don't pick these big banks, that has someone back east who is basically never available, when you call them or when you email them, because they're not going to sit down with you and go through the 50-page document and answer all your questions. They have who knows how many files, and you're just one of them, and they just need to push on through. So that's a great benefit of picking someone local, because then you can sit across them and talk about it and be able to write, sign everything and know exactly what you're signing.
Absolutely, absolutely. And then throughout the process, it's part of our process that you hear from us all the time. You get weekly updates, and anything new happens or changes, you know about it, and we're right there. And I always say, please, please, please call. Don't ask your neighbor. Don't ask your pool person. Don't ask your landscaper, right? Call. If you have a question, I want you to call, because we want to answer your questions with knowledge, not hearsay. Right.
And I do appreciate, when people reach out to me and ask me questions about the loans. However, it's not my specialty, and I'm not updated on all the new laws and regulations. And I am not the best person to ask. I'm always going to advise you to talk to your lender, whoever that is, because they will know the answers way better than me. And then just let me know what the answers are so I can keep up to date as well, through you.
Yeah,
so,
absolutely.
Yeah, it's way too hard to keep up to date with everything that's changing.
All the time.
I feel like I'm lost. Every transaction, I'm like, I have no idea what's happening in the lending world right now. I'm sorry.
Yes, it changes a lot. For sure. It changes consistently, and things change every day.
Yes.
Every day in the lending world. Yes. Keeps us on our toes, that's for sure. For sure.
All right, I'm just going to ask her a couple more questions. Who are the other people that clients would be working with? So you are kind of like the face, of the loan, but who are other parties that they, people will be calling them and asking for documents or signatures or that kind of thing?
Okay. So, funny, I did a whole talk on this once.
Did you?
Right? And you can get really, really granular. And I came up with a list in flashcards of 43 people
43 people? What?
In a transaction.
No.
Yes, 43 people.
No wonder it's confusing.
Right. So, I'm talking about inspectors, insurance, title company, escrow officers, escrow assistants, right? Mm-hmm. Realtor, lender, loan officer, processor. There's so many people. Yeah. So many people. Then there's the funder, right? There's just so many people all the way throughout the process. Yeah. So we literally came up with that many, and I was like, oh my gosh, I had no idea. And I'm in the business. I've been in it a long time, and I had no idea there were that many.
I just can't believe it.
There's a lot. Yeah. There's so many people. Now, will you hear from all those people all the time? No. You're going to have a few that you talk to a lot. Typically, your lender and your realtor you talk to all the time.
All the time.
Your title company you'll talk to a few times, but then you'll see them at the end. Yeah. For sure, for about an hour, and sign your documents. So, but I think that the main people is the lender, the realtor, a processor for the lending staff. So if there's anything when it comes back out of underwriting, you've got approval and you need a couple items, they're going to ask you for those items. Okay. We'll communicate that as well. Okay. But you'll know who that is. It won't be a surprise. Okay. It shouldn't be a surprise.
So after you get underwritten, then it moves on to the processor, you're saying?
No, actually processing is before.
Oh, it is?
Yeah.
See what I mean?
So processing is before.
Okay.
And then it goes into underwriting. Okay. We get the approval. You guys go shop. Yeah. You find your house. Contract comes in. Yeah. Okay, so I will say this. There is a big, big difference. There's pre-approval and final approval. That is a common misconception all the time.
Yes.
Okay, so we've gotten very detailed.
I agree with that.
Yeah. We've gotten very detailed in explaining that. So pre-approval is what we do up front before you're under contract. Okay, and there are going to be some things that have to be done after you get your contract in. So then after contract is in, we get the updated documents, we get the appraisal in, you've picked who your insurance company is going to be, you get your insurance, all those things come in. We're going to submit it for final approval. Okay. So the magic words are
clear to close.
Yay! Yay! So that's really
true.
what you want to hear,
yes.
Right? Because people say all the time, but I was pre-approved. I don't understand. Why do I need to give another pay stub? Right. And it's because we have to do that along throughout the process.
Yeah. It's so true. Yeah. Because sometimes, too, you don't even hear the clear to close until the day you're signing. Which
hopefully...
I mean, it hasn't happened with you, but with other lenders, and it scares me to death. Because I'm expecting clear to close 3 days prior to closing. Right. That's what contractually is supposed to happen.
Right.
However, sometimes when you're working with lenders outside of the state and who are on their own time schedule, they don't give you that. And it kind of just makes me really worried. So I'm like running around like a crazy person trying to find answers like, why didn't I have my clear to close? Right. What's the holdup?
Right. So, where are my docs? What's going on? Yeah.
So it's a little scary sometimes.
Yeah. But, yeah, so clear to close is the phrase you want to hear. Definitely, for sure.
Okay, cool. Well, let's ask you one more question. When are interest rates locked in?
So it's different for each person. So I talk about it with every client because every client's different. So some people may want to lock in instantly. The second they find the house, we've got the contract in, they're ready to lock in. They are not the gambling type at all. Okay. There are other people that watch the market consistently, constantly. Well, I don't know if I want to lock today. Maybe tomorrow will be a better day. We talk about what reports are going to come out that week, what the Fed's going to announce, and what we're going to see. So it's a constant variation, and rates move, right? On a daily basis. And a lot of people don't know that. And they can change multiple times in one day. So, and are they going to change 0.5%? Typically, no. Can they change 1/8 of a point? Absolutely, they can. And sometimes the rate won't change, but what it costs to get that rate can change. So it's very, it's personal. It's personal for people.
Complicated too.
It is very complicated.
So how does that work then? If the cost of the rate changes and the rate doesn't change, but it makes it more expensive to be able to lock in the rate?
Correct. Okay. Correct. So let's say I had a client, let's just use an average of a 650 credit score. They wanted to lock in on an FHA loan. They go to lock in on their FHA loan, and they could have a 4.75% rate. Okay. Okay, this is just an example.
Yeah,
I'm not
just
saying,
an example.
Just an example, people. So 4.75% rate, or if they paid a discount point to buy down the rate, they could buy down the rate.
Okay.
And let's say get a 4.5% rate. Okay? So they could do that. So let's say they decided not to lock. Okay? The next day, they could still get that 4.75% rate at no cost.
Okay.
Or they could buy the 4.5, but it's going to cost more now because the rates changed. So they will have to pay more money to get that rate than they did the day before.
Okay. And that fluctuates every day?
Yes.
Is what you're saying?
Yes.
Okay.
And it's not, in some days it stays the same, and sometimes it's a slight movement, and sometimes it's more drastic.
Mm-hmm.
So, it's something that we look at, we keep track of.
Okay.
And it's something that it really depends. A lot of people just rather lock in and be comfortable.
Yeah.
And if it changes by an eighth, I'm not going to worry about it. At least I know I'm safe.
Okay. And what's the latest amount of time you can lock in a rate?
Well, with the new TRID law, so there's a series of events that have to happen. So once you lock in your rate, a loan estimate or an LE, you may hear that term, has to be sent out to the client.
Okay.
So then that's sent out to the client, and that has to be signed and acknowledged. And then after that, only can then a CD go out, a closing disclosure.
Okay.
So at that point, once the closing disclosure goes out and is acknowledged and signed, you have another 3-day wait before you can sign your documents. So if you really, really want to live on the edge
and take a gamble
and take a huge gamble about closing
4
on
days
time,
before close.
no, I'm going to say because it takes time to produce those documents too. So, I mean,
Maybe
I would never, ever suggest it, but a week before a close would be
the latest you could possibly wait.
Yeah, and that would be horribly scary on my part.
And my part too, I'd be worried. So, when is the best time to lock in a rate from what you've seen clients do and so forth?
So it really depends. So I typically have two types of people. People that want to gamble a little bit and see they want to see if they can get a better deal if they wait a little bit and say, is the market going to move any? Do we have that ability to get a little bit cheaper?
Yeah.
And then there are some people that want to lock right away.
Immediately.
They feel more comfortable. They feel secure. They don't have to worry about what the economy is going to do. They don't have to worry if there's some national event. They're locked in and they're protected. So most people lean towards the protected. They want to be protected and not have to worry about
the added stress.
Of
what could possibly happen to make that. But if interest rates don't move like so incredibly fast, like it wouldn't go up like a whole entire point in 1 week, right?
No, I mean, barring a national disaster, a national event, something major happening. There have been times when we definitely have seen some movement in rate, and I've seen it from 3/8 to a half a point.
Okay.
But then it will correct itself, typically, and slowly come back down. But then it can happen again, and it'll inflate, and then it'll come back down. But we are on a trend where interest rates are going up. Okay. It's just that trend.
I was going to ask you to give us a little bit of what's happening right now in the market that you're seeing as far as interest rates.
So interest rates are going up. The Fed released again that they are going to increase. And so it's a natural progression of what has to happen. We've been at very low interest rates for a long time. And as the economy, we've got a decent economy going, and that's going. Interest rates are starting to move up, right? So for a long time, we were in the 3% range, right? So people were buying houses for a lot less than they were paying on student loans.
Oh, yeah.
Right?
Oh, yeah.
Yeah. So it's that whole, it's got to go up, and it's starting to move up, but people are unnerved by that because they are used to it being so low for so long.
Yeah.
Okay, so when I bought my first house, it was over 9%.
Wow.
Because it was an FHA loan.
Wow.
Okay, and it wasn't because that's what the rates were. Back in the mid 80s, rates were in like 16, 17%. Yeah. Higher than credit card interest.
Which is crazy.
Yeah. So we're still below the historic low.
Yeah.
even though we're creeping up, we're still below the historic low. So,
and what does it mean as the interest rates go up? What does that mean for somebody's buying power?
So it depends. Most people are concerned about, obviously, is their payment.
Yeah.
Okay. So there's a couple of ways to look at that. So it's if you're at the top of your price range and the interest rate goes up, just depending on how much it moves. It depends on if it's an eighth or quarter or half or what it comes to.
Yeah.
Or if you're using some of that money to get that lower rate, right? But now it's even more expensive to do that, so you have to take the higher rate. So it's just one of those things that it depends on. Every situation is just very different. Yeah. It's like every loan is like a puzzle to me, which I love. That's why I still do it after all this time. But in every situation is a little bit different because of those life events, right? Everybody else may want this, but this might be the most important thing to you, right? This person might be really rate conscious and I just want the lowest rate. Well, this person's like, well, I don't really care about the lowest rate. I just need to make sure that I'm within this payment. This is where I'm comfortable. This is where I'm comfortable making a monthly payment every single month.
Yeah.
So as long as I'm within that, I don't really care what the rate is over here. I just want to make sure that I'm here.
Okay. So as interest rates go up, it basically makes your amount of money that you can qualify for go down.
It can.
Is that right?
Yep. Yeah. So what the interest rate will change is your debt to income ratio. So as the interest rate goes up, and say you were pre-qualified for $200,000, and then the interest rate went up 0.25%, you might be qualified now for $193,000 because the interest rate went up. Okay, so your debt to income ratio is now higher.
Okay.
So that's something that we are aware of a lot, and especially when you're looking at, and if there's market changes or corrections, then we really look at that and try to say, okay, remember, this is where we are, but if the rate changes, that's why it's really important to know about what you're looking at for rate, so that you have an idea. And if you hear, oh my gosh, you're not locked in, and you are under contract, and that could affect you.
And
that
you need
could cause
to
you not to qualify.
Yeah. Oh, yeah. That scares me.
Right?
Well, especially if you buy at the very top of your,
yes, absolutely.
What you're qualified for.
Absolutely.
And your debt to income ratio is at the very, very top.
Yes.
That would scare me because then, if interest rates go up too high, it could possibly put you out of the buying the house that you are in contract for.
Absolutely.
So
Absolutely.
That's good to know as well.
Yeah, 100%.
Okay. Well, I guess that's all the questions I have for you.
Okay, good.
I'm
well,
like, you did a great job.
Thank you.
And I'll put her contact information at the bottom, so if anybody wants to speak with her, ask her more questions, or get pre-qualified, I'll put that in the comments so that way everybody can contact her, okay?
Thank you.
All right.
Bye.
Talk to you guys later. Bye.